Hey investors, welcome to the Real Estate Hackers channel. I'm your host, Dave Hathaway. Today we are going to analyze the Knoxville, Tennessee real estate market and an actively listed property to determine if it is a great rental property. By the end of the video, you will know the Knoxville, Tennessee market fundamentals. You'll know how much rental properties cash flow in Knoxville, and you'll also know if you're considering investing in the Knoxville, Tennessee market, if I think it's a good or bad financial decision. So let's get into it today. The address we're looking at is 7525 Carryway, Knoxville, Tennessee 37909. And if you haven't already done so before, would love it if you guys subscribe to the channel, hit a like, and we will keep the free content coming so you can continue to be a successful investor. So let's look at the overall market first. In Knoxville, Tennessee, it has a population of 202,000 people, and it's increased by 5.85%, as you can see by that graph. That is a lot. It's been growing a ton. Unemployment rate is 2.9%. which is below the national average, so all is good there as well. Average salaries, according to ZipRecruiter, are $46,760,000 a year. That is below the national average. I think it's around $60,000. Median sales price is $337,000, which is up 13% year over year. And properties are on the market for 69 days, which is up 20 days year over year. And so it shows that the market could be flattening out here. Market rents or median rents here in Knoxville are $1,797, down $153 year over year. So you can see that rents are coming down. Prices normally follow. The price to rent ratio is 15.7. If you have a price to rent ratio under 15, that normally shows that you can find cash flow in the market. So excited to explore Knoxville. Doesn't have any Fortune 500 companies headquartered here. It does have the University of Tennessee, the Volunteers. So as far as major sports, that's what you got. You don't have any major league teams there in Knoxville, but you do have the university. That is a large university. Doesn't actually have an international airport, which we like to see in areas that we invest. The closest international airport is Nashville, Tennessee. It's about 2.5 hours to 3 hours away. So that's a bit disappointing. But overall, I'm going to give the market one thumbs up. I mean, there's a few concerning things in there, i.e. low average salaries. That kind of can keep real estate prices down. And then the no Fortune 500 companies and no international airport anywhere close. So that kind of inhibits some buyers coming into the region or some people moving to the area that like to travel. And so I'm just going to give it a one thumbs up so far for market fundamentals and overall market. Moving on to the Google Street View test of this property. If you look around, this is a single family home. This is a nice neighborhood. There's nothing that grossly stands out that would be a red flag to me. Overall, I think this is a pass for the Google Street test. No trash, no hanging out. The only thing that I don't love is that there isn't sidewalks in this neighborhood. It is on a cul-de-sac. It's at the start of a cul-de-sac, but it is on a cul-de-sac, which I do think is a plus. And you can get longer term tenants that way just because it's a safe place to play for kids. And so we will give it a pass for the Google Street test. Moving on to the listing details of this property that's currently listed in Knoxville. Property is listed at $285,000. It's a 3-bedroom, 2-bath, single-family home. It's got 1,600 square feet. Was built in 1979. And moving on into the house, my rehab suggestions would be definitely repainting the front door, replacing the shutters, capping the trim on the outside. It looks kind of beat up. And then moving on into the interior, it looks like the floors are kind of worn, so I would redo the floors. Cabinets and countertops in the kitchen probably getting redone. I would add value on this property. One of the reasons why I like it, it's a 3-2, but it does have a garage, and I probably would convert the garage into living space. It looks like it'd be an easy conversion, convert it into living space, make another room, and so you'd have 4 bedrooms instead of 3. Also looks like you'd have to repaint the entire house and give it nice fresh paint, and it looks like you'll probably have to redo the bathrooms, give them an update. And for the bathrooms, I would replace the vanities, put some nice framed mirrors, and I'd replace the flooring in one of the bathrooms, the one with the gray tile on the floors. I'd replace that with a nice LVP. The tile bathroom, it looks like it's still in good shape. It might be linoleum, so you might have to replace it. That's not a huge cost, but definitely you're replacing vanities and mirrors at the very least. And so at the end of the day, I'm thinking that this renovation comes out to somewhere around $40,000. It's a 1,600 square foot house, and I'm thinking it's somewhere like a medium rehab. You're going to be somewhere in like $25 a square foot. And so 25 times 1,600 comes out to a $40,000 renovation budget. And so that's what I'd probably shoe in for the renovation budget. So speaking of rehabs, if you're finding yourself to not know how to do the rehab and not have processes for a rehab, you're finding yourself using bad contractors, sloppy contractors, your projects are going way over time, we have a course called Master the Rehab 101. You can find it at mastertherehab.com. You can check it out there, and that's the plug for the course. Moving along to the analyzer. So looking at this analyzer, Zillow shows that rents are $2,141. When I'm looking at comps, I think that it is going to achieve more rent than that, especially if you create some more living space and make it a 4-2. And so I comp it out at about $2,300. That's what I'm using for my rents. Property taxes are super affordable in Knoxville. One thing that I noticed, property taxes, $936. And then moving along to the cash flow. So if you look at cash flow, it's going to cash flow $1,693.83 or 5.96% on a cash-on-cash return. Or if you use leverage and get a 30-year fixed, you're going to end up being a cash flow at $68.63 a month or 0.97%. And that's with using a 30-year fixed DSCR loan at 6.75% as the numbers that we're using. And so I don't love those numbers with the rehab. It's not my favorite. I think if you are under $100 cash flow a month, you'll often, if you have any repairs, you will just have zero cash flow or you'll be coming out of pocket. And I don't love doing that for rental properties. So for this property in particular, this would be an appreciation play, and you'd probably get stuck with some of your money in the property. You wouldn't be able to pull it all out. And so as an investor, I don't love it. I try to get this property for cheaper than $285,000 due to the renovation. I think that's why it's been on the market for so long, for 24 days. But looking at the stats of the property, it looks like there's a lot of interest in this property because it's in a decent area. And over those 24 days on Zillow, if you can see here, it has 3,988 views, which is a ton, and 310 people saved this property. And so I don't think you're going to get much more of a deal than this. It looks like they recently cut the price by $14,000, and so you're just going to have to find a value add property in this market. And so I'm not going to recommend purchasing this one, although if you could get it at maybe $270, it might be a decent deal, but I'm not going to recommend that you purchase this one. I do like the market. I did give it a 1 thumbs up. I do think that for this market, you can also look at new construction properties. With new construction properties, the builder has a little bit more flexibility on interest rates, so you can lower your interest rate, so you can play around with interest rate. You might be able to get like a 5% interest rate or maybe a 4.5%, or buy down that interest rate to try to get cash flow. I did notice that there are new construction houses that you can purchase for $350. And I think in a growing market that has great fundamentals, where you can get just a little bit of cash flow, let's say $200 of cash flow, maybe you're putting more into the property, I think it's going to be a safe bet. You're going to get appreciation overall, but not for this property. And so hope you guys enjoyed that. We'll see you on another Deal Day series.